Moving on with our project, and it is time to look at the long-term time frames. Long-term time frames are being represented by the weekly chart and monthly chart. Now you might think that weekly charts and monthly charts are not tradable or should not be taken into consideration because such a time frame cannot be applied to trading binary options. But I would disagree completely with you, because these kind of time frames offer the most important support and resistance areas, and by the time price is coming and reaches a specific support and resistance area based on the Ichimoku Kinko Hyo, we can engage in buying calls or buying puts. Now, whenever trading binary options, the main concern a trader has is to look for the best possible setup for the option to expire in the money. If the option is in the money at the expiration date, then this means the option is profitable and the trade was successful. The following are the conditions for a binary option to be considered profitable. If you buy calls, for example, buying a call option implies that the price should be higher at the expiration date than the striking price. For example, this is the euro-dollar 1 hour chart like you are used to. And if you decide in buying calls at the current level 132.69, basically you are looking for price to be higher at the expiration date, and that means that should be higher than the striking price, and the striking price is the price you are buying the option right now, 132.69. So buying the option right now, 132.69, and you're looking for at the expiration date price to be higher, and that would be a profitable binary option trade, and it is also set to expire in the money. On the other hand, buying a put option implies that price should be lower than the striking price at the expiration date. Whenever buying puts, a trader is looking for price to decrease, and therefore, in order for the option to be considered profitable, the price at the expiration date should be lower than the striking price, meaning the price the option is actually being bought. If these conditions are met, then the option is set to expire in the money and is considered to be profitable. Based on the above, the expiration date is important when trading binary options, and also important on the weekly chart here. While the weekly chart is considered not to be traded or tradable if you want on the short-term horizon, such a higher time frame, it has different advantages, and the most important aspect to take into consideration is the fact that all the Ichimoku elements are offering extremely strong support and resistance areas. Therefore, like mentioned on the previous recording, we are looking for price to bounce from the moment the Tenkan or the Kinjun it is being tested here. So I will just take the shapes. So we're looking for price to bounce from such a moment. We are looking for price to bounce as well when the Kinko is touching the cloud right here. Let's try to look for some other examples here. We are looking for price also to reject when Kinko is touching the candles in front of it. For example, here you are in a bearish market and Kinko comes to the upside and touches the candle in front of it. Of course, we are looking for a rejection here. Then we are looking for another rejection here. Now, Kinko being projected 26 periods back, then we are looking for actual price 26 periods forward from here. So 26 periods forward from here to look for a pullback. Also, if you look here, Kinko is coming from the downside, meets the top of the cloud, and that would be another interesting area for us, as 26 periods forward would be the actual price, like this. 26 periods forward, and from this moment on we can engage into buying puts. So buying puts here based on the Kinko, buying puts on the next candle based on the fact that that the Kinjun is being touched. Then buying puts as well. Then buying puts here as well because Kinko is touching here the price. So buying puts right here on the 26th candle. And then again, when Kinko comes again here, 26 candles again here, we are buying puts as well, with expiration dates being varying very much from the time frame to the time frame. In this case, we are looking for expiration dates higher than 1 week, and you should be on the safer side trading this time frame. What I would do on the weekly time frame, on the monthly time frame, I would insist for the time price is touching the Kinjun or the Tenkan in bullish or bearish markets. For example, like here in a bullish market, again, the first time the Kinjun is being touched, a strong rejection to the upside takes place. Stay tuned now, please, for the next time frame, the monthly chart.